Hello YouTube and welcome back to my dividend portfolio. This month's update, March 2024, and let's see how things have been going this month. So this month was quite rock and roll really. It started off at the 14% as it ended last month, and then it's been rising all month. And I was waiting for a dip to put my money in as I normally do. That dip never happened, so all I've really done this month is invested like my pound a day into Gladstone Land, which I've been doing for this year's my experiment, and a couple of other companies that I just saw was down on the day. But all in all, I didn't really invest anymore this month, and I've still finished on quite a high, so really impressed with that. Looking at the top 10, so Rolls-Royce been quite a big winner this month. That's why it's so big. It's number one now. The S&P 500 and BP share the other number two slot. Meta doing really well. Shell, HSBC, and so on and so on. So I'll have a little quick flick down so you guys can see how things are shaping up in terms of the top 10 and what each company makes up a percentage of my portfolio, and how I'm trying to do things out. So ideally I want everything at 2%. That'd be an ideal balance. But I thought that was going to be easy to do when I started this experiment, but it's not, because of changing share prices. It's really hard to maintain a 2% balance. So it is what it is. I've sort of give up on that now. Probably would try and get everything at 1% maybe, but probably not in this 5-year gap. So that's what my allocation looks like, distributed across my whole portfolio, across the 3-4 pies that I do. So let's have a quick look through how the individuals are stacking up. So 3M was having a really good month up until the pre-market today, and it's dropped down quite a lot. So I might stick some money in there. What else has been having a roller coaster of a time? Well, it's actually been, because it's been such a good month, everything has been up quite a lot. Oh, I sold Direct Line. That was one of the things I did do this month. Sold that on the 7th of March at £2.22. So quick look. Sure that's what it was. There we go. Direct Line insurance. Yeah. So because they obviously had that merger talks, put me in a profit. Yeah, on the 7th of March I sold out at £2.22, which is about 56 quid I think I got from. They obviously went up a little bit more, but then dropped down, so I think I got out just at the right time on that. Caterpillar still flying high, just dipping a little bit today, but still all-time highs for that. Financial sector's been doing really well, so Citigroup's been on quite a rise. Coca-Cola's back in a profit, has had a good run this month. Even Diageo not doing too bad, nearly at my £100 mark where I want to get that to. What else has been going well? Gladstone Land, let's have a look at that. So I've been doing this £1 a month. So as you can see, over the month, it's been up and down, sort of been hovering around sort of $13. Had a little peak towards the end there, but not too bad. So I've actually, my losses, I think they were £34 last month. I'm down £31, so getting there. But my average share price has gone down to like $16.16. So getting there. I'm going to continue to do that for another month, see how it goes. Horizon, that's a little bit of a dip this month. It's a bit of a shame, but still good dividend payer. Keep going through. We're in a profitable situation on here. This is in my hold to sell pile now. Now I sold Direct Line. I'll put this one in the hold to sell pile because I want to get it gone. And it needs to get to a 10% margin. So we're at 2% at the minute. So if that gets to 10%, then that'll be gone as well. And what I've been doing is putting it into the other companies I'm trying to sell to boost or cut down the average share price for that, and hopefully sell them off quicker. So I'll go for that when I get to it. Beckett's, whatever it's called, got the £56 I bought for direct line into it. But we'll get to that. Illegal in general is doing quite well this month. Meta, I didn't get to show this last time. So Meta has been on the month fairly flat actually. We did have quite a nice rise at the beginning of the month. It's paid a dividend as well. It's first dividend paid out. I think we've got like 29p or something like that, which is really good. So I've moved that from value pie to the 2% or less dividend yield pie, and I'll go through those shortly. Nucor's had a bit of another little bit of a run this month. Does really well on share price. This my best performing one, apart from Rolls-Royce. Penning Group having a bit of a downer. I want to move. This will be one of my next ones I sell. I think. Move it in there. Pfizer is quite new to the pie. It's in profit, which is doing really well. Reality Income. That's what I want to have a look at that one. So that's actually had finished the month quite strong. Actually, I was doing on a bit of a downer. So I'm still putting in the extra money I get in here, like an extra tenner a month in this one, because it's down. Like my average share price is like $59, and it's only trading at 55 nearly. Yeah, so still quite a long way to go. Reckitt Bankster. This is the one I want to sell. So unfortunately, so it had a bit of a dip come in the last month. And then on the 7th of March, I obviously put a bit more in because I thought, it's dipped, it's going to recover. And then it dipped again. So a little bit disappointed. But it was in profit just before the end of February. This has got to get to 10%. So hopefully it will recover soon. It goes ex-dividend this month, I think, on around the 10th. So I need to, if I put some money in tomorrow, maybe, see how it goes. Trig's doing okay. Quite like that one. Rolls-Royce, just an unstoppable force. It's actually doing that well. It's not far off my trigger for sale. I sort of bought when I bought this because Rolls-Royce had a bit of a pounding after the pandemic. I bought it. It's like 20 and 22 or something like that, and it was like about this sort of price, 80 odd p a share. I sort of said to myself, because it's about £5.50, I'd consider selling it. And so it's had a really strong year, had a really strong last year actually, back into last year, and a really strong start to this year. So we're already at £4.20. That is why it's top of number one of my pies now in my total investments. I'm up 235%. Crazy numbers. But anyway, so yeah, so if unless it starts paying dividend, if it gets to like £5.50, I'm going to think about selling it because that was my point of sale. Segro, getting closer to being in profit. Again, I just want to see my sell pie. I want to get this to 10%. And if I get Gladstone land into profit and sold by doing the £1 a day, this would be my next one to do to help get rid of this one. Shell's doing okay. Paid a nice big dividend this month actually. But yeah, oil's doing okay this month. Bit better than last month anyway. No, Tesla. Still wish I'd sold that. Still on a downer. Never mind. You win some, you lose some. My Whiskers doing okay. Doing really well actually. Quite like that one. Yeah, ETF's doing alright. Still I got stuck with this one. So I bought it by when I was rejigging my pies. I put the ticker symbol in and bought the wrong one. So I'm trying to sell one of them, but I'm actually thinking about selling this one now, the Euro one, and then stick it into that one. Both did the same thing. I think that's in profit. So when we'll think about that. So it goes, and then but then we're at the end. So overall, not too bad. Show me pies. So I do have. Somebody did ask me this, and I couldn't do it last time because it crashed. So I do have 4 pies. So I have a dividend yield less than 2%, which I put £1.50 a month in. I've got a dividend yield which is over 5%, which I put £2 in. I've got my value pie that I put £5 in, and I've got my hold sale I put £1 in. So as you can see, all my pies are in profit. My best performing for profit, share price wise, is obviously 2% less because that's more stable. This pie is quite volatile, but it's still in profit, and my value pie is obviously soaring up because of Rolls Royce. But if you look at the individual pies, the performance, yeah, gone up nicely. Keep going up. This one, steady little climb, look, it's not doing too bad. Hold to sell, obviously, as you expected, that's where I'd sold direct line out, and then put the money into Reckitt Bengster. So that's going okay. And then obviously my value pie, I moved out Facebook Meta and put that into this pie. Okay, so let's have a look at the performance of the month. So over the month, I put in £48. That's the couple of little bits that I put into like Reality Income and Gladstone Land and Diageo. I think I put some money in there as well. So a couple of those. So only put £48 in this month. So that gives me an interest of £38.55. So let's look at the performance of the portfolio and what dividends I got. So 3M paid out £1.31. Amflac paid out 83p, and AG&C Investments paid me out £1.40. So it's same as last month, really. Bluefield Solar Income paid me out £1.30. And then oil stock paid out this month. So my first time oil stocks paid out this month was BP at £4.34. Sorry. So that's a nice big chunk in there this month from that. Emerson Electric paid me out 56p. Gladstone Land, big bump up, but that's because I've been putting that extra investment in there. So 41p, so doing okay. Horizon Technology, which I've just seen on share price, a little bit disappointed on that, but still good dividend at £1.26. IBM paid me at £1.35. The first time S&P 500 did ETFs, the one I want to sell, paid me out 71p. JP Morgan iShares, so ETF on that for bonds, paid me out. It's a monthly one that paid me out 68p. Johnson & Johnson paid me out 71p. LTC Properties, which got to £1 now, paid me out £1.08, which is the same as last month. Main Street Capital paid me out twice, 2 payments in this month, which was always a nice surprise. But £1.51 there. McDonald's paid me out 65p. Meta Platforms first dividend, that turned into a dividend company now, so I got moved around. So Facebook paid me out 29p, so quite actually happy with that for the first dividend. Microsoft steady there on there at 17p. One of the biggest traded shares on Trading 212 actually, that and the SP 500 and Tesla, but even though Tesla's share price is shocking, I don't know how that works out. Pfizer, so my first dividend from that, £1.47, so that's actually really good, more than I was expecting. And I've got my 2 bonds, ETFs, very, very similar ones. The one paid me out 91p, the one paid me out £1.01, which is really good. PPG Industries paid me out 44p. Prospect Capital, which is my other big monthly payer one, £1.32, so I'm really happy with that. Reality Income paid me out 73p, so another minor increase on there. So about the same, no, just slightly less than last time, so my £10 didn't quite get me the bump that I was wanted. Shell was another big oil stock, paid me out at £3.34, so making this quite a nice month really. Sherwin-Williams paid me out 24p, and Stag Industry paid me out 39p. T. Rowe Price paid me out £1.02, which is quite actually happy with that. They actually sponsored the London Oxford versus Cambridge boat race this year. One of the sponsors for that. Trig paid me out £1.30. And my risky one, 24 monthly select income fund, which is just doing it for the dividends because it pays out quite a lot, but it's really risky and really volatile. Buys and sells debts. Paid me out £1.21, so it's really good. Unilever paid me out 72 pence. And the ETF started paying out now, my Vanguard ETF, so the FTSE 100 one paid me out 57 pence. The All World High Dividend Yield one paid me out £1.15. The emerging markets paid me out 18 pence, and the S&P 500 paid me out £1.15, which is bizarre. Matching that one. The VGov one, so the UK government bond one, paying me out 26 pence. It's actually down from last month. Oh, didn't really notice that. The US bond one paid me out 51 pence. And WW Granger paid me out 36 pence. And lastly, Whitestone REIT paid me out 28 pence, giving me a total for the month of £37.12 pence. So did really well. So before we forego the numbers, let's have a quick look at the couple of charts I have here. So biggest month so far this year, but as expected because it's the end of Q1. It was Q1 always pays out the most dividends at the end of each quarter. The top 5 dividend payers, BP is number 1, followed by Shell at number 2, AG Investments number 3. Oh, how close is that? Oh no, look, AG Investments is actually number 2. Shell's dropped down number 3 in dividend payers. Prospect Capital is number 4, and my new number 5 is the 24 monthly Select Fund at £16.44. So they're my top 5 dividend payers. Nice to see a nice growth chart there actually. So on to the final numbers then. So as I put in only 48 quid this year, so I'm only up to £600 invested. So my actual return before dividend reinvestment this year is 130%. Crazy numbers. And including dividend reinvestment brings that down to 110%. But that's just this year. It's not to be read into. So actually the number we really should focus on is this one, which is my overall return on investment, is running at 23.65%, which is really good. I've done like 2 different yields now just to give people a bit more insight into it. So my dividend yield on cost, so that is the amount of money I put in versus how much dividend I get out, is now running at, this is the one I've always sort of been measuring because I think it's the best measurement for me. It's running at 5.97, so nearly at 6% now, which is increased about 0.2%, 0.1, 0.2 each month. So doing really well. But on the yield, so dividend yield on the value, sorry. So this is then the value of my portfolio. I'm running at 4.83%. So it depends when you measure. I always measure on cost because that's the money I put in. And that's how much money I'm getting out. So, but either one of them two is a good measure. Running really well. My average dividend per month across the 12 months so far is going to be £7, I think. But I'm actually running a capital growth this year of £660, which is quite a lot. Quite happy with that actually. So going on to my front sheet, so this is where I sort of track all my metrics really. The expenditure growth line, how am I following that? I'm still trending with it. A nice little rise this month after 2 low months, so back up there, doing really well. And then just have a quick look at this chart because I've now got it working on Google Sheets properly. So this shows my total dividend per year. So as you can see, year 4 now, we are already beating year 1 and we're over halfway beating year 2 and we're only in the first quarter. And this line represents my actual capital growth per year. So as you can see, 2022 was my least growth year. There was quite large growth in terms of 2023, and 2024 was off the chart, shall we say. So doing really well. So then going on to my 50k, can I make 50k in 5 years? Still looking as a no, but we're up to nearly 17. Should be at 17 by the end of the 5 years, but still got a lot. We've got to put another. Yeah, I want it to be. It's going to be over 20 now. It will be over 20 now, so we might get halfway through it. But if I looked on here, it's actually looking like, yeah, very close. It will be very close to 11 years to making that 50k. But early warnings of the, or early warnings, early signs of the targets. I'm already smashing the capital growth. So there we go. That's really my portfolio in a nutshell this month. Hope you've enjoyed the video. If you have, please give it a thumbs up. And there's a link in the description below if you want to start your own Train 212 account. Because you're enjoying these, please use that link. We'll both get a free share worth up to £100. And all free shares that I receive, I do sell at the end of the year and donate that money to charity. So a little bit of worthy cause there. All right, well, thanks for watching, guys, and I'll see you next time.